Micron is sitting at a critical level right now, and the next breakout could decide whether we see $1,000 or a drop toward $520. On the 2-hour chart, we can see a potential head and shoulders pattern developing. The structure is fairly clear. We have the left shoulder on the left side, then a higher high forming the head, and after that, price created what could be the right shoulder. Now, the most important thing here is that this pattern is not confirmed yet. There are two critical zones that I'm watching. The first one is the upper resistance zone, roughly between $960 and $1,000. If Micron breaks above this area with strong price action and ideally confirms the breakout by holding above it, then in my view, the bearish head and shoulders setup would be invalidated or at least significantly weakened. In other words, the market would be telling us that buyers are taking control again, and the probability of this bearish pattern playing out would decrease substantially. So I would not want to be aggressively bearish if price breaks and holds above that upper green zone. On the other hand, we have the lower support zone around $740 to $800. This is the key level for confirming the bearish scenario. If price breaks below this lower support area, especially with a strong candle close and increasing volume, then we could get the confirmation we're looking for. At that point, the head and shoulders pattern would have a much higher probability of playing out. And if that breakdown happens, the potential downside could be significant. Based on the structure and the measured move concept, I'm watching the $520 area as a potential longer-term downside target. However, that doesn't mean price will move directly from the current level to 520. There could be several support levels and potential bounces along the way, so I would treat 520 as a potential target zone rather than a guaranteed price objective. So, to summarize the setup, above the upper zone around $960 to $1,000, the bearish setup is in serious trouble and the head and shoulders pattern could be invalidated. Below the lower zone around $740 to $800, the bearish setup gets confirmation, and the downside scenario toward the $520 area becomes much more relevant. For me, these are the two levels that really matter. Until one of these zones breaks decisively, I think the best approach is simply to wait for confirmation rather than trying to predict the next move. Remember, technical patterns are probabilities, not guarantees. So always manage your risk and wait for confirmation before making a trading decision. Let me know in the comments, do you think Micron breaks to the upside, or are we going to see the head and shoulders pattern play out?